Hi everyone, and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly into the new week, geopolitical events remain the main driver, I think, of these markets. The Russian sanctions that they engaged last week in terms of retaliation to how the West had put their sanctions on Russia have begun to take effect, and I think that these will continue to impact. They're targeting agricultural products, and that I think means that there's going to be a glut of oversupply in the European food market, and that could potentially even add to deflationary fears around Europe. So I think that's got a little bit of legs to run in it still. So we need to be careful of that moving forward. Now, also you've had there were tensions that built up last week due to the fact that Russian troops had been massing on the borders of Ukraine. But then towards the end of last week, the Russians started to pull back a bit amid the claims that they were just playing war games, doing exercises, military exercises on the border. So the reduction of the troop numbers on the border helped to ease tensions in the market, and certainly that led to a rebound in Wall Street. That rebound has certainly continued into the new week, with our Asian markets and also European markets starting very strongly on Monday. Now, exactly how long that this improvement in market sentiment can last remains to be seen, but certainly it just goes to show that geopolitical tensions are still the big driving force in markets at the moment. That's certainly having an impact on volatility. Volatility was extremely elevated last week. Just come down a little bit in the last day or so, and I think it will continue to fluctuate around at these more elevated levels. So we're watching out for the VIX volatility index with that. Also, certainly the currency pairs are showing much bigger volatility in terms of their daily trading ranges as well. So something to look at there. Now, in terms of the FX markets themselves and the technical levels that we need to be looking out for, certainly it looks like there's a beginning of a possible euro rally at play. Certainly against sterling, there's been a breakout to a 1-month high, but also euro dollar is showing a few technical signs that there could be a rebound on the way. Now, in terms of the level that euro dollar needs to get above, we're looking at $1.3445 being a bit of a trigger point, because that was a key resistance that was hit last week. So if it starts to trade above there, we can start to think about a possibility of a recovery, maybe back towards $1.35 and perhaps even higher. In terms of cable, though, cable remains under pressure. It's still trading in a big 4-week downtrend. That's pulling it lower, and it just looks like it's going to come back and retest that $1.67 mark at the moment. There's that downtrend resistance comes in at $1.6840, so anything above there at the moment you'd be thinking about possibility of that relationship breaking down and more of a consolidation effort. Now, in dollar yen is one of those currencies which I did say that has had an extremely large daily trading range in the last few days, and as I said, that's been driven by these geopolitical tensions just ebbing and flowing on a daily basis almost. And it just looks like that at the moment there's a bit of a rebound going on, but still I think we're playing within that big range between 101 and 103, and I think anywhere between there it's a really difficult call, and I think again you need to stay close to your geopolitical events to see how that one's being driven. Now, in terms of the equity markets, the S&P 500 and Wall Street especially, I think, has been continuing to remain strong. I think that this correction in Wall Street is just still a possible even chance to buy that we're looking at here. There's been no major damage to the long-term primary bull market that we've got on Wall Street. Back at 1900, the S&P looks like a pretty decent buying opportunity, to be honest. Good band of support there, and I think it remains a decent opportunity. Now, the European markets are a completely different ballgame. The DAX remains extremely volatile around the Russian news, and it trades higher and lower whenever there's any sort of news release about the geopolitical events. So what we're seeing today is that the DAX has rebounded, but exactly how long that's going to last, who knows, because it seems to be moving up and down almost on a daily basis. But certainly the weakness on a net effect has been pretty significant recently, 10% lower from that high in total. Now, the bigger the move down, that means that if the tensions begin to ease, and it certainly looks like there's a bit of a starting of that process, then that could mean quite a sharp rebound in the DAX. FTSE hasn't performed as badly as the DAX, therefore perhaps it's got less to unwind on the upside on a rebound. And that certainly looks like it's what we're seeing today in the early move. The DAX outperforming the FTSE, but certainly DAX key support comes in at 8,913, and the FTSE key support is at 6,500. Now for gold, again a very key asset play that moves around on the geopolitical events, and once again, as the tensions have begun to ease, the gold price has started to fall away again. Now the gold price finding support above $1,280 was a very good support area, but back above 1,300 it's also beginning to sort of look like it's improving again. If it can hold above 1,300, which is not only a psychological support, but is around about where that key 144-day moving average comes in, then that could begin to start to improve the outlook again. But certainly it's just fluctuating around on these geopolitical events, and we'll just wait and see how this one pans out. Okay, so across the week, what are we looking at in terms of economic releases? Well, we start off on Tuesday with the German ZEW expectations. Now that is obviously, any sort of German data will give you a picture in terms of how the biggest driving force of the Eurozone economy is doing. So we'll certainly be keeping an eye on that. But then on to Wednesday, one of the biggest days of the week. Certainly we've got the Japanese GDP data. That Japanese GDP is expected to fall 1.8% on a quarterly basis. Now that just suggests that the economy is beginning to take impact from the rise in the sales tax from 5% to 8%. And it just looks like it's beginning to struggle again. So that's a key number on Wednesday. And then we're looking sterling side, because you've got, first of all, the UK unemployment, and more importantly, the Bank of England's quarterly inflation report. That quarterly inflation report is going to be really important for all the traders who are looking out for how interest rate expectations are moving, because the Bank of England gives its update on its interest rate expectations, on its inflation and its growth, and it'll be very important to see how that moves and how that changes from the previous report. Then on Thursday we're looking on the Eurozone side again with French and German GDP and the second and final reading of Eurozone inflation. And then finally on Friday we've got UK GDP, the second reading of that, and also the preliminary US University of Michigan consumer sentiment. So lots going on this week, not so much US side, but certainly from Japan, UK and Eurozone. There's some big data that's going to be released, so lots to go on again this week. So I wish you good luck in your trading, and I will speak to you next week. Thank you.